Hello guys, glad to have you on board again today. Hope you had a great weekend. I already warned you about that. It's going to be a tough week for me because I'm going to have my baby son at home or without nanny, which means it's going to take a lot of my time that I won't be able to spare for answering any of your emails, messages in Discord or whatever, which means, as I already warned you about that, extended time and extended delays to get the answers from the questions you might ask to me. Of course, you still have lots of users in Discord that might be able to answer most of your common questions, but those you want to ask me personally, they will require extended patience from you to get answers. So there will also not necessarily going to be a daily forecast during that week. I'll try my best to handle the spare time I'll have during some rest of my baby boy, but it's not resting a lot, to be honest, which means I might not be having that much time. So if you see no forecast for someday, just don't drive yourself crazy and wait for the next one the day right after. So might not be 5 forecasts during that week, maybe just 2 or 3 eventually. So anyway, moving on and starting to analyze the cryptocurrency market, starting with the Bitcoin, which is the big guy right now, trying to figuring out what we're doing right now near that big support area. The market failed to break down 2 times. First time we tried with a lower shadow candle. Second time we failed with a close. We got bullish engulfed the day right after. So that's not the best case scenario for the bears. I mean, two attempts, double bottom, and moreover, that bullish engulfing pattern, that is not the best case scenario. We're now having what could be bullish price and bullish momentum, which means momentum already broke above that level. We already broke above the bearish trail line, and we've got a bullish trail line on the way, which means in terms of daily market signals, we are at a tipping point right here, right now. Because if you look at the sine wave it could be a problem, meaning that we've already, in terms of sine wave reading, we've already terminated, or we're nearly terminating a bullish oscillation. So meaning we're in a bearish reversal area. Doesn't mean that it's going to reverse, obviously, but I would say that at that point, any support breakdown will be problematic for those who've been buying like I do. So if you are a buyer on that market, have a look at this. You don't want to see the price going downward and making closes at the lows. That will be suggesting that the price terminated consolidation in here, and that nasty part will be down the road after that. We're going to see this, but if you figure this out as being a bearish trend channel, if for some reasons we were failing in here one more time and getting to one more bearish impulse, I think this one is going to break down the trend channel. So you can forecast the price to do this and this, okay? And in that case, we'll be falling apart into the long-term buying areas I've been talking about for quite some time. So we'll see how this plays out. But as for now, I think the momentum is going to break the sine wave cycles. Okay, so I expect the price to go brutally higher and making higher highs on the price. We've got higher high on momentum. We need to have higher high on the price. Otherwise, this is what we call a bearish hidden divergence. Okay, so we'll see about that. But if the bulls cannot manage to break up that resistance at some point, say in the next following days, that will be a very sign. That will be a sign of huge weakness on the bull camp. So if the bulls are in, and they should be right now, I think they would really need to break up a resistance. Otherwise, that means there are no bulls, and if there's no such thing, that means that we're going to break down supports again. In terms of sine wave, in the daily charts, we've been working around that support. Remember, that was a weak bullish cycle, and we spent that entire cycle retracing to the downside. So I remember, if we're going up, all we're going to do it for is to be a technical pullback to get interesting selling prices. Okay, so that just to set things straight, if we retrace, it's not to be bullish, it's not to go to the moon, it's not to reverse the bearish trend. The weekly chart remains bearish, But we could require a technical pullback to have bears with better prices right now. I mean, if we fail to break that support, it means that we're going to have to require better selling prices to get more volume, more bearish volume pressure to go through that support once and for all the next time we'll try it out. It's pretty much the same thing regarding Ethereum, IOTA, and EOS. I'm going to add this one to the watch list of my favorite cryptocurrencies because I think that one is relevant actually right now. So these are the 4 cryptocurrencies I will follow right now. So EOS is just starting to get in, but all of those cryptocurrencies are basically doing the same thing right now. We got Ethereum still working around that support area, but it hasn't broke anything yet. Worse than that, we also got pretty nice lower shadow candle in here, and still got some room to get to the upside in here. Sideways hasn't reached out to the bearish reversal area. Same thing in here, we've got bullish trend line, trade line pulling up out of the reversal area, which means we could have bullish trends ongoing, but we really need to see the price validating this. Regarding IOTA, same thing in here, try to break down support, failing it. We'll see how it goes. You can clearly see 2 bearish impulses, totally suggesting still being in a range. So that will be perfect to have some kind of pullbacks. In IOTA, this is the price I'm forecasting to get back to, that volume area. Let's say 1.85 as a target to get to take profits. So I'm buying IOTA, but once again, not buying and holding at all. It's just to me buying to retrace, get a lot of FOMO trading and guys who will try to buy to the moon once again, and I'll sell those. I'll sell this optimism once again. If we get there, if I have any bearish signals, and I think we'll have, I'll get back to the bearish side. Not selling IOTA because I can't do that, but I'll sell Bitcoin as I usually do, meaning you cannot sell throughout the cash market, which means I'll use the usual way I've been doing it, which is doing it via CFD contracts in which you can buy or sell without problems. Okay, so it's buying to me major cryptocurrencies to get back to resistances, and whenever we get back to resistances, if the consensus is switching to heavy bullish, everyone's trying to buy again, whatever, you know how do I trade psychology in crashes. Anytime we get to too much optimism, I search for sell entries, pure and simply. Of course, if we break up that resistance, it means the market is bullish. But at some point, if we're still in a crashing market, we cannot break up resistances, which means right there we should find strong resistances and get to the downside afterwards. So that's it for the cryptocurrency sector. We're going to get back to the main assets review. And this is the economic calendar in French, so I'm going to tell you what this is about. But basically, all we have to sum up the core informations to sum up for that week is the fact that we'll have 2 holidays in U.S. sector, so 2 days without quotations in the daily perspective in Wall Street. So today will be interesting because the guys will be positioning themselves ahead of those 2 days off. So today might be a great day, and probably, and especially at the end of the session, we'll have interesting moves. Let's say the latest half hour before heading into the closing bell. Then we also got the RBA, so Australian Central Bank, which is going to be interesting during that week to move on for our AUDNZD scenario, as well as retail sales to come up the day right after. And then, of course, we've got ADP, NZD, the ADP and NFP coming right along to terminate that week. I don't think this is going to be the big of a deal, to be honest. I think right now the market is not necessarily focused about the job market, but most likely about GDP and production and of course stock earnings. I mean, this is what the market, I think, is watching closely right now to see if we need to drop to 15% or if we can hold the current pricings. Now moving on to the charts. First, we're going to start with the forex market. So euro dollar, I'm not trading this one, but we've got pretty much weird things happening right now. They are trying somehow to create a bearish reversal structure, but as you can see, we've got bullish reversal in here, with a morning star pattern, now bearish with a potential evening star pattern. So really this is just a mess to me. But I strongly think this is way too dangerous to consider shorting that thing. So I remain bullish on the euro dollar, even though I'm not trading this one. I think we're going to head back to the bearish previous signal and bearish resistance and simply building a range in here before eventually breaking lower or starting a deeper retracement. So let's see how this plays out. But right now, euro dollar pretty much neutral to me. I wouldn't favor anything bearish. As you can see, most of the signals are bullish right now. So I'll suggest more bullishness heading into a 1.18, for example. And I cannot see beyond that. I mean, we're in a range. So right now, the only interesting prices. Remember, when you don't know what to do, if you figure out the range is your current context, this is what you have to do. You put the range scenario, and that's it. I mean, you're buying blue, you're selling red, and that's all you care about. And you at least need to get into the blue to buy and into the red to sell. Anything in between is just for the dumb traders, and you don't want to be part of them. Regarding GBP, things are still not that pretty. We can't fucking make this thing breaking a single resistance. So we'll see how this plays out. This could just be a pullback. As you can see, momentum is now making higher highs, and that's great, but I want to see the price doing it as well. We've terminated a bearish impulse in sine wave, which suggests, if you have a look at there, okay, look at the oscillator. Oh, sorry, I should have put it there. Okay, look at the oscillator in here. Anytime this oscillator is crossing above 0, I think this could be a very interesting buying entry signal to get into reinforcing GBP/USD. Still remains speculative as long as we don't break a single resistance, which means we need to break that price to have some kind of confirmation. So I've been putting an alert in here. Anytime we break this to the upside is a good sign. Until we manage to do it, it's too dangerous to get into leverage trading of GBP/USD. So remain low leverage. Eventually consider some tiny reinforcement in there, but nothing more than that. If that thing keeps on falling apart, you don't want to be part of it. Regarding EURJPY, I think things are great right now, but not that great. I've been stopping out in here, but I think this is for the best. I mean, this could give me better prices to sell, and that's what I expect. So I've got two options right now. Either we get back to the breakout level, and at that point, if this is not going to be a support, then if we break that down, I'll get back in, no questions asked, and I'll even double down the position sizing. But I think right now we need to have extended consolidation, which means we haven't found out the wave 2 in here. I've been too aggressive, which means I've been stopped out. At break even, it's no loss. Okay, it's just that I think the wave 2 can be higher with more complex corrective waves. And at that point, this is what we have right now. I think we terminated an A wave in here, my B wave, and we're making C correction in here. So as you can see, wave 1, 2, 3, 4, 5, leading diagonal. Sorry, we've got B wave in 2 waves, A, B, C, great, and now we're finding out to terminate those C impulse, which means we could nearly do it. I can clearly see this is a wave 4, so I wait to see wave 5 in here just to going slightly higher, and I've been using the volume profile to find out that precise price, which is 129.65, something like that. Whenever we get there, I think I'll try to search for any bearish signal to get in, but right now patience is required. So I would like to see the market consolidating in here, pulling some kind of bullish confirmation signal or not. It's not necessary, but that will be normal to have this, and then I want to see one more bullish impulse to sell here with high leverage. I was short leverage 4 in here, got stopped out. I'll get probably leverage 6 or at least 5 in here because the stop loss is going to be pretty close to the entry price. So high risk, meaning I can take some leverage in here because the invalidation is not going to cost that much. But I'll set invalidation above the previous high, that's since it's been straight. So that will make an invalidation of so 0.5% stops. And I'm going to risk a 3% loss in here, so probably I'm going to put a leverage 5 or 6 to be totally appropriate, as we're in a bearish trend, and that thing should collapse if we manage to find a resistance there. The next bearish wave will be the wave 3, meaning wave 1, 2, big wave 3 to expect, and 2 subwaves. As you can see, wave 1 was 2 subwaves, which means we're in an ending diagonal kind of structure. Sorry about that. Which means we should get to at least, I think, 161% retracement on the next bearish impulse. And then we should have wave 1 to 4 wave 4 entering into wave 1. So this is the movement I want to catch up. But right here, I think we'll need to take profits. And obviously don't forget about it. I mean, forgetting about taking profits on the next wave could be a big mistake, because we could have very deep pullbacks. This is what suggests the pricings. As we have 2 waves, if we're in a bearish trend, when you got 2 waves to the downside, 2 waves to the upside, you have 2 waves again to the downside, but this is what we call ending diagonals, and ending diagonals always have to not overlap wave 1 and 4. I mean, wave 4 always enter into wave 1 territory, and I hardly see how we can I can easily see that this is the price we'll be probably selling again in wave 4, but that will be taking huge gain in here, probably taking entire positioning. I mean, I'll probably take the entire short leverage in here and sell again the wave 4 to get to wave 5 in the end and to terminate that thing. Okay, so that will be a divergent ending diagonal kind of structure, and this is what I expect the price to do. So we'll see about that later on. AUDNZD though, we're under resistances. I've been taking profits right now just to set things straight. As we had that catalyst with the central bankers, I was leverage 7 on that thing, which means I've been taking 25% off. I'm back to leverage 5, so I've been taking some nice gains in here, still leveraged on that thing, but I think we could have eventually some kind of pullback that I'll be able to buy at good pricings. So I've been removing some leverage here temporarily to see how we could play the central bank. It's either we're going to have a deeper consolidation, or we're going to break up the resistance with the market catalyst. But anyway, if it breaks up, good to me. I still have leverage 5 in that market. If it retraces, good to me. I'll still have pretty nice gains to re-inject in that market to get into higher leverage in the end. So that's it for the forex market. Let's heading into the big game. Bond market, I think we're finally at the point where we've got everything we need. We've got a taking profit pattern triggered on the German bonds, German yields, which means German yields could get to the upside, and we could have bullish yields on the Eurozone and bearish as well with bearish index prices, and that could be absolutely normal at some point. That would simply mean that the investors are now forecasting the ending of QE, which is something I was forecasting for quite some time. It just took an extended fucking time to get there, but now I think we got anything we need to get into bond market, into selling bonds, selling BUNDs and 10-year yields of the German economy. Okay, rising yields means selling bonds, so it will be selling the BUNDs. Okay, same thing goes in here. I think we are still bearish in there. So we're going to have bullish yields on the Eurozone, bearish yields on the US, which means US is going to fall apart in terms of equity pricing and not the Eurozone. And this is what I was expecting. I think we still have 6 to 10% losses to make eventually on the Eurozone. That's as we already lost a lot, but we might have 10 to 15% lose in the US. And in order to figure out that spread between the equity pricings, I think the bond is going to be, the bonds are going to be the asset to fill that correlation gap. It means that we will have probably, I think, a falling yield in the US with a rising yield in the Eurozone for the time of that consolidation we could have on the equity pricings. Second element, absolutely need to talk about this one. The repo market is now 2.23% yielding in a daily, in an average price, in an average rate, which means we're in very dangerous area. Remember, anytime we get above that is nasty pricings to come. Second thing, suggesting we're heading into very dangerous pricings in the in the US area. Junk bonds are back to back to support, and as you can see, when the junk bonds are sold, they are not doing it pretty. I mean, we could be near that current pricings, which means we could have something falling apart. I'm not going to trade that asset, too dangerous to me, but whenever the junk bonds are selling, you can be sure that the equities will sell as well. So from what I can see, everything points to more downside on the equities. We just need something to push prices, and we've got the NFP, we've got the 2 days off, we've got everything we need for a very, very bearish week on the US equities, and I think this is what's about to come. So to me, the most confident scenario I'll have is to see the VIX heading into World 21, which is the first time we've got into manipulating that market to the downside. So that's at the minimum we should do. And I strongly think that if something rolls off, we can have an extended pricing leading us to 31 without a problem. That wouldn't necessarily be surprising. So I'll have a look at this. Whenever the VIX will go there, if I have bearish signals, I'll take my profits. If I have nothing, I'll just let it go, because that thing could really fall apart. I mean, everything's suggesting this. We've got Shanghai Composite really falling apart. We've got GPN as well, breaking down supports. Eurozone is doing as well. Everyone thinks that market is bullish, yet all the signals are red. You know how I feel about that. I've been telling you about quite some times that the market is having a too aggressive bullish buyers on what could be a neutral market. And whenever you have that, there's always a tipping point. Whenever the market is finding out that it was wrong, and whenever it gets obvious that we're going to have downside, everyone is just trying to sell in the same time, which means we could have very nasty pricings and price action in the next following days. Moreover, gaps because of the 2 days off in the S&P 500, which means the cash market is not going to reopen until Thursday. So not the best case scenario. Okay, it means today is going to be a very interesting day for the US equities, and I think they can some kind closing very low pricings today and gapping even lower on Thursday. So that's the big deal, big scenario I have to play right now. I still remain bearish on anything of those assets. I mean, I'm shorting on HSI, I'm short on GPN, short on FTSE, short on NASDAQ, short on SPX. No, sorry, I'm no longer short on those two, but I might get back in today, to be honest. I need to find out if I have anything suggesting this. So no, nothing to short so far. Oh yes, we did have a double bearish signal. So for some reasons there is a resistance in here that could be used to handle the risk management, which means placing stop loss above that price. I wouldn't necessarily be that aggressive right now, but right here is some place you can put some stop loss above. So if somehow we can have interesting risk-reward ratio, so the targets to me, next support is there. So consider putting this, and to me that's how I could do it. I mean, this is where you put a stop loss. Means here are the uninteresting price, minimum price you want to sell, good price to sell. This is what I would suggest to do right now. Waiting and eventually trying to get there where you have a decent price and decent risk-reward ratio. To get in there and targeting that price, putting a stop loss above the previous highs. That will be what I suggest today and probably what I will do. So that will mean minimum retracement to 27.22 and trying to sell anything that gets near that price today. I would like to have this. I mean, bullish opening in the SPX would be great, and then bullish finding lots of bearish and closing at the low would be the best case scenario to have a nice bearish gap to come on Thursday, probably near those prices in which I'll be able to take some nice gains. So we'll see how this plays out, but to set things straight, we could be into very dangerous pricings right now. I mean, price areas. I still think that we still have a fifth wave to do right here. I mean, this would be just a wave 5, keep on consolidating with a running flag pattern. So I still see some downside potential, and then afterwards probably a retracement, and then we could get to nasty parts, if not already. I mean, if the NFP some kind is disappointing or whatever, if just Wall Street is figuring out that everything is falling apart, don't be surprised if the market is just going to the downside and not retracing. Okay, so no buying anything right now. To me, it's too dangerous to buy in the US equities. This thing can really be a falling knife at some point, and everything suggests that that might be the case regarding the repo market, regarding the junk bonds, regarding the VIX. We've got plenty of room to go to the upside, which leads me to the next potential scenario to trigger that week, which is metal buyings. I'm going to tell you why, because the gold is pretty cheap right now, but not necessarily into a very interesting price area. But we're still working around that last support out of that trend channel. But I've got really two options. It's either really we find some bulls in here, and I think this could be what will sign the end of U.S. equities. I mean, the money could flush out from the U.S. equities and jumping into the gold. That would be the only option to me to get to holding that support. Option number 2 is simply we break it down, faking bearish signal, and then in here I'll be ready to buy some gold. We will have 100% out of an ABC correction. We will also have the breakout target, which I think is absolutely out of context. I mean, we're in a range, so the breakouts don't get filled, okay? And we're in a bullish trend. Sorry, at least we have some bullish potential in here, meaning bullish breakouts can be taken, bearish breakdowns not necessarily the one I want to trade, meaning that right here to me is a target, and is a target I'm ready to buy if I have bullish signals on the 2-hour chart time frame. So option number 1, bulls take it over brutally in here. Option number 2, we get down here to trigger a fake bearish breakout of that support, but right here I'll be ready to buy. Rebuy, basically fake breakout, rebuying aggressively, and this will probably be a V bottom. So if we're going down there, it'll be V bottom and then chasing all the stop losses at once, meaning brutal reversal, and then of course the pricings afterwards will be very aggressive. You can figure out something like that, but with a longer and extended targets. Silver as well is pretty interesting. That's the one that leads me to believe that we might be finding the bottom on gold as well, at least on all the metals. Because if you have a look at this on the weekly perspective, what I have in here is nothing bearish, yet everyone thinks the metals are bearish for a reason that I can't explain. But to me, this is just a consolidation structure. We can clearly see 1, 2, 3, 4, 5 with a fifth wave extended and wave 1 to 4 overlap. So clearly to me this is a bearish, we're in a weekly chart, so this is a daily scenario. We're taking care of the context in here, so this is what I have. Damn it. Okay, so as you can see, wave 1 to 4, they're overlapping, meaning we couldn't manage to make multiple candle closes inside the wave 1 territory. Wave 1 made lower shadow in here, wave 4 made upper shadows in here, but nonetheless you never had closes overlapping. So it's wave 1 to 4 clean overlap, a big nice extended wave 5. You have to know this, the metals as well as some commodities generally do a wave 5 extended. They love doing this. I mean, this is so usual to have wave 5 extended on metals. And then this is what we have, clearly a first impulse, so retracement. Okay, so we're bullish, but we're bullish in retracement. And at some point, I think that this was clearly an impulse, meaning five bullish impulse waves. That doesn't leave much room for options into consolidation when you have this. It's generally an ABC structure, which means you had a first bullish impulse, you're going to consolidate in a B wave, and then you're going to have a second bullish impulse, generally making 100 to 127% of the previous impulse. So we're in B wave, meaning we're in consolidation. In that wave is just pure noise. We've been contracting the momentum to create some squeezing pattern, and the squeezing cannot go to the downside because the structure, as if I'm right, and once again I can be wrong, but if my context is right, that momentum squeezing can only be done to the upside, which means this is probably a fake breakout. Okay, so what the market can do right here is just getting in there, finding some heavy support, and then just exploding right after. So I strongly think that we have something to play out there in the next following days in the entire metals, which means buying gold and buying silver. So I'm watching this thing pretty closely. If we get back to resistances, I'll buy. If we get to that support and trigger double bullish signals, I'll buy. Tiny stop loss, once again, not that big of a deal. 50% invalidation in here, which means if we break down that support, I'll take half my positions off. Second stop loss will be right down there, and I think we have no chances to go there. We'll have much bigger chances to trigger the weekly second bullish impulse. So it's a weekly impulse, which means we could have bullish metals for at least 10 weeks. So consider 2 to 3 months bullish impulse to go into the metals, and probably that big move like this one. I mean, in terms of momentum, expect something like that, something that is going to go up, and not produce a lot of retracement. So, and a movement that is going to go parabolic. I mean, this is why what the metals generally do. They start slow, and then they get to accelerate till they get to the target. So forecast something like that, but this is the big scenario I have in mind in the next following days, and that should help us triggering the gold scenario as well. So we'll see how this plays out. That's all I had for you guys. Regarding the stock market, it's pretty simple. I still short on Tesla, Apple, Facebook, Nvidia, and Netflix. That's it for now. I'm still bullish in General Electric, and this is all I have, and I don't change anything, and I don't expect any changes during that week. Goodbye, guys, and see you later. Sorry, I'm going to take the questions. I forgot about this. If it makes sense to draw trend lines on the momentum indicators, yes, you can do it, but not necessarily I would recommend that, because you already have something that is doing the exact same, which is the trail lines. I will recommend to use this instead. But if you, I mean, I cannot tell you not to do something. I mean, you're free to do whatever you think. It's just if you find reliable patterns trading momentum with trend lines, then good for you. I mean, what I'm trying to share with you, which is my own version of the strategy, is not necessarily something that you have to use right in place. You can customize and make it your own. So if you found reliable patterns, just use those and don't ask too much questions. If it works, to use it. With Heikin-Ashi candles, I'm not pretty sure about that. Heikin-Ashi is something that is going to average the prices. Okay, it's like using moving averages instead of price. My indicators have been designed to be very aggressive, which means they won't be late in signaling. They will often be too early as well, but they are designed that way to give very aggressive signals. So at some point, using averaging pricings with Heikin-Ashi wouldn't necessarily sound reliable to me in terms of a technical perspective, but I know some people are using it, and if they do, means that they think this is useful. So you might be, I would strongly recommend you to get into the Discord channel and asking for other users that are using it that way, and they will tell you themselves if this is reliable or not, and they will tell you how legit are the signals, but I think they are more able to answer your questions than I will be, as I'm not using it. Yes, I nailed the bullish move. Yes, we'll see about that. We haven't broke a single resistance yet, so it's pretty much way too early to consider this thing a won battle. So remain speculative in terms of leverage. Don't overestimate the potential. Don't get into FOMO trading. Don't go into euphoric. We've got nothing like that. It's just we're trading a bottom. We're trading a support, and we're trying to get some bullish extraction out of it, which is nothing to be confirmed at that point. Anyway, goodbye, guys, and see you eventually tomorrow.